You open your banking app. The number's there. Your money. Quiet, reassuring. But here's the uncomfortable truth. That number does not mean what you think it means. Because the moment you deposit money into a bank, it stops being yours in the way most people imagine. And almost nobody is told this. Right now, this matters more than usual. Because interest rates are high. Banks are under pressure. Governments are quietly changing the rules. And people are realizing, sometimes too late, that money is not a physical thing anymore. It's a relationship, a promise, a claim. And not everyone in that relationship has equal power. Let's slow this down and make it simple. Imagine you hand your friend $100 and say, "Hold this for me." You expect to get the same 100 back whenever you ask. But that's not what a bank does. Legally, when you deposit money into a bank, you are not storing it there. You are lending it to the bank. The bank doesn't keep your money in a box with your name on it. It takes ownership of it. In exchange, it gives you an IOU. Your account balance is not money sitting somewhere. It's a promise that the bank will pay you if you ask. Most people never hear the sentence, but it changes everything. Because if you're lending money, the borrower decides how it's used. So what does the bank do with your money? It uses it to make loans, mortgages, business loans, credit cards, government bonds. Your paycheck becomes someone else's debt. Here's the part that surprises people. The bank doesn't even keep most of the money you deposit. In many systems, banks only keep a small fraction in reserve, sometimes 10%, sometimes less, sometimes effectively zero. That means if 10 people deposit $1,000 each, the bank might keep only a small slice and lend out the rest. On paper, everyone still sees their full balance. In reality, the same money is supporting many different claims at once. This works as long as nobody panics. But if everyone asks for their money at the same time, it breaks instantly. That's not a flaw. That is the design. We've seen this movie before. In 2008, banks were full of assets that looked safe until they weren't. In 2020, markets froze in days. In 2023, banks collapsed over a weekend because too many people tried to leave at once. The money didn't disappear. The promise did. Now here's where the story gets uncomfortable. You are not first in line. If a bank gets into trouble, there's an order of who gets paid. Shareholders lose first, then bondholders, then maybe depositors. Yes, even depositors. In many countries, deposits are insured.